So hi, welcome to the first meeting for the school year. So since we have some new people, this meeting, I will just introduce the Hoperation Fund and like our missions and operations, and then I will make some announcements about our charity initiatives, vice presidents, and other things.
Mm.
Then I will um, talk about the Hoperation Fund investment portfolio and some updates on it. And after that, we will have our financial news reports by our news reporters. Then I will go on to talk about my market analysis. And finally, we'll move on to the investment lectures for today. This school year, we will be focusing on like fundamental analysis and about like how to like analyze a company based on its financial reports, such as it's like income statement, balance sheet, and cash flow statement. So I will be talking about like those three and like other key features of a company's financial report and how you can use a company's financial report to like see how good a company is. But for today, since this is like our first meeting for this year, I will go over some key concepts in investing, such as like the compounding effect and some basic financial math. So yeah, let's get started. So the Hoperation Fund is a student-led nonprofit organization, and we have two missions. So we
We're gonna go through.
First, we are dedicated to help to funding underserved areas and neglected nonprofits. And some of these areas, for example, are education in underserved regions, children and women's welfare, environmental protection, STEM, and other causes. Our second mission is to fill the flaws in traditional school education by teaching students and adults essential knowledge and skills in personal finance and investment. And these skills are often overlooked in like normal schools. So we do this through four operations: fundraising, investing, donating, and education. So I'll just walk you guys through like using the website and our four key operations. So our first operation is fundraising, and we can raise funds through a variety of activities, such as gift sales, lectures, and other services. And on the website, you can see our 2025 fundraising and 2024 fundraising activities. Additionally, um, there's is also a section on our latest fundraising um, event, which is a back to school leaf vein bookmark sale, and selling some traditional, beautiful leaf vein bookmarks which are like the perfect gift for like readers or students. Our second operation is investing. So we invest the funds we get into the stock market, prioritizing high quality businesses for to hold for the long term. Um, on our website, you can learn more about our investment strategy and the 2023, 2024, and 2025 investing details. There is also a section on investing resources. So you can, here I compiled some clips of previous uh, finance lectures, and whether you're an old member and you want to like refresh your memory on our previous investment lectures, or you're a new member and you want to catch up on what we talked about in previous meetings, you can go to our section and click on these videos and learn like important concepts in personal finance. So this is like a really cool section. There is also a members resources section, which unfortunately needs a password. Our third operation is donation. So each year, we donate our investment gains to various nonprofit organizations or any neglected groups we feel need help. And these can be areas such as, here I listed some areas. And here you can also see our 2025 and 2024 donation activities. Additionally, I also put a lot of details on our recent charity initiative in Labutin Elementary. So Labutin Elementary is located in one of the most underserved rural regions in the Philippines, and it's like in a pretty poor region. Um, many families there struggle to have access to basic education, and the schools there struggle to have enough funding to provide that basic education. So many young children don't have enough education. Um, Most of the time, like they don't really continue on to like middle school or high school. They just have like a basic elementary school education, and that education isn't like very good, and like they don't have like enough access to like good schools. So that's where the Hoperation Fund comes in. And we contacted Labutin Elementary with the help of our advisor, Mr. Doug Huntley. And we funded the construction of a concrete wall to replace the old wooden fence. So this will protect students from outside dangers and flood damage. And additionally, in the future, we plan to provide books, essential learning resources, and like equipment. Finally, our last operation is education, and we have monthly finance and investment lectures, as well as workshops, invited talks, book clubs, and an AI group. So yeah, that's an overview of our operations and website. So now I want to talk about our members and leadership. So the Hoperation Fund, when it started, only had around like 12 members, and it now has 125 members from 22 US states and several countries. We have a vice president of media design, Emily Chen, and three vice presidents of chapters, Chloe Lee, Oliver Fan, and Hao Cheng, who are the vice presidents of Dallas chapter, Houston chapter, and the Asia Pacific chapter. So I really appreciate our vice presidents for their contribution to the Hoperation Fund. Also, one of our vice president of chapter of like the Asia Pacific chapter, Hao Cheng, unfortunately can't attend this meeting today because she is based in China, and there's like a big time gap. So she recorded a video, and I'm going to play it for you guys. Like she introduced herself and her duties as a VP of chapter.
Hello everyone,
Can you guys hear this? Yeah? Okay,
yeah,
great.
and I'm super excited to be here. I'm an 8th grade student from China, and I'm also the new VP for Asia Pacific here at Hoperation Fund. Basically, my job is to help our club grow in the region, find more people to join with us, and look for people and projects we can help. At school, I'm really into Model UN, and I love playing volleyball and piano. I'm really looking forward to working with all of you and let's have a great year. Thank you.
Yeah, so that's her introduction. Additionally, we also have 5 advisors, Mr. Dan Penley, Mr. Douglas Huntley, Mrs. Jing Wan, Mrs. Yan Zhang, and Mr. Zilin Zhang. And our advisors bring valuable insights and give us like feedback and perspectives in our operation. So I would also like to thank our 5 advisors. Mm, okay, so since I don't know if our 5 advisors are here today, um, I will just like introduce them for you guys. I will also introduce our 4 vice presidents though. So they should all be here. So how about let's let our vice president of media design, Emily Chen, introduce herself first.
Hi guys, my name is Emily and I'm a sophomore at the Hockaday School and I am going to be the VP of Media Design this year. And basically my job is to design the promotional flyers, videos, and posters for the Hoperation Fund. And so far this year I've helped Olivia work on the flyer and the logo. And I'm really excited to meet you guys and talk to you.
Yeah, thank you so much, Emily. Yeah, um, I really like enjoyed working on the flyer with you, and it's been really good. Thanks to your help. So that's our vice president of media design. Next, I will also let our VP of chapters, Chloe Lee and Oliver Fan, introduce themselves. So how about since Chloe Lee is first here, Chloe, can you introduce yourself to us and like your duties?
Yeah, hi, I'm Chloe. I'm an eighth grader at TCA in Addison, Texas. I'm so honored to be um the 2025 BP of Dallas chapter for the Hoperation Fund. My job basically, I will lead and oversee operations in Dallas, Texas. Additionally, I will help with fundraising efforts, recruit new members, and really establish this welcoming and cooperating environment. Outside of school, I really enjoy tennis, anything STEM related, piano, and I love debate too. And of course, I'm really passionate for business and investing, and I'm so excited to be your VP of Dallas chapter for the 2025 to 2026 school year. Thank you.
Okay, thank you, Chloe, for that introduction. Um, and next, how about Oliver Fan? Can you introduce yourself for us?
Hi everyone, I'm Oliver. I'm a sophomore at Taylor High School in Katy, Texas, and I'm the vice president of the Houston chapter. So I will recruit new members in Houston and Katy. I will coordinate events here, manage some fundraising and projects, and enhance organizational operations. And I really like programming, space exploration, math, science, and of course, finance. And I'm part of the math club, science club, and coding club at school. And I also enjoy exploring astronomy, machine learning, and playing the violin and piano. I'm so excited to meet you all this year. Thank you.
Okay, thanks, Oliver, for that great introduction. And yeah, so now that we have like introduced and got to know our vice presidents and leadership, I will move on to an update about our fundraising. So our most recent fundraising event is our Leaf Vein bookmark sale. And again, I've talked about that a few minutes ago too. Um, so I'm currently selling these bookmarks, these handcrafted bookmarks, which are made from like a traditional Chinese technique. And no two bookmarks are the same because like no two leaf veins are the same. And these are just like really beautiful bookmarks. They are really great gifts for like teachers, friends, um, like students and anyone. So I would really encourage you guys to look at these bookmarks, um, like see them. You don't have to buy them, but it would be great if you could like recommend them to anyone else. And yeah. Moving on to our charity activities, um, our recent charity initiative at the Louboutin Elementary School has been very successful. We have donated $900 to the elementary school to help the school build a new high-quality wall to protect the campus and ensure the safety of the students there. So before the old fence of the school looked like this is an image taken from Google Maps, and it was, as you can see here, it was very like flimsy, and it was um, broken down in many different places. However, a wall to protect the campus is very important because in that area, like in the area around the elementary, there sometimes during election times or during important events, there will be like a huge surge in like crime rates, like kidnappings or just like theft or shoplifting. And there are sometimes also wild animals in that area too. So it is really important to have a water. A few weeks before we were going to begin construction, there was a big flood that came and washed away most of the old fence of the school, and it even washed away like a few younger kids. Fortunately, the kids were rescued, but then decided to immediately begin construction for the wall. So our advisor, Mr. Huntley, who personally delivered our $900 donation to the school. He oversaw the construction of the wall and he took a lot of photos. And here are some of the photos he took. They show like the wall in construction and in each different step. So it's just really nice to know that we're like helping kids. So here's also a video of the completed wall. So in the future, we also plan to like donate books, equipment, and other resources to the school too to help like to help improve the quality of education there. Because like again, education is really important. Education can like change your life. um, if these like students have better education, maybe they can grow up and they decide they want to be like a teacher and they can help other people in their community, or they want to be a scientist and make important innovations that would help your community, or like a social activist. So an education is really important because it can help you like achieve your dreams and like help your community and your society. Okay. So now let's move on to talk about our investment portfolio. So the return in August was 0.59%. In August, I fully liquidated the position in QOD and I bought more shares of AVGO, Google, and ASML. I also initiated new positions in SPMO and SOXL. So the total return of the Hoperation fund, like the total cumulative return since the beginning of the Hoperation Fund in June 2023 is 89%. In comparison, in contrast, SPY only had a return of 58.5% and QQQ had a return of 66.4% during that time period. And I fully expect our returns to achieve 100% at the end of this year. Of course, our year-to-date right now is around 8.32%, which is around SPY and QQ's year-to-date, although slightly less, but that is perfectly normal because um because of in the beginning of this year there was a bit of there was a lot of volatility and uncertainty, so it affected our investment strategy a little. But again, that is also perfectly normal because even the best investment portfolios will sometimes experience periods where it may not outperform the market by a lot, or experience periods of losses or anything. However, because we because our investments emphasize holding high quality stocks and emphasize and these stocks and companies have strong competitive advantages, strong fundamentals. I believe given time, our returns will greatly surpass SPY and QQs, which technically we've already done now. So as for the market right now, based on a long-term investment model, I believe the midterm and long-term market direction is bullish. Note that I generally do not include the short-term market direction because it is really hard to predict the market direction in the next few days or few weeks or anything. There can be a lot of volatility and fluctuations in the market direction. However, I believe that the overall market direction right now is still bullish. Although the S&P 500 right now is a little overvalued, so the market may experience some small corrections in the near future. I think the long-term direction is still bullish though. The short-term market sentiment, according to the CNN Fear and Greed Index, is 54. So this number means that most people right now are neutral. They're not greedy or fearful, and it's just neutral, normal. Since the market has pretty bullish signs right now, I would suggest having more of your portfolio in stocks and relatively little in cash equivalents, long-term bonds, or gold. The market valuation right now is still highly overvalued. The S&P 500 P ratio is 30.55. And for those of you who don't know or want to refresh on your memory, the P ratio or price over earnings ratio is basically the price of a company divided by the earnings of a company. Or in this case, it's the price of several companies divided by the earnings of several companies. And this is the P ratio is a good evaluation metric for on how overpriced or underpriced a company is compared to its earnings and how much money it earns. So the P ratio right now is definitely in the high points. As you can see from this graph here, this graph shows the historical S&P 500 P ratios since 18 something. And you can see right now it's 30.55. So this is definitely on the high range, and it's I think the highest point in a few years. The 10-year treasury yield right now is 4.068%. So I've said this before, a general rule for finding like a good estimation of the S&P 500's fair P value is the reciprocal of the 10-year treasury yield. So 1 over 0.04068. And I forgot exactly, but I think that's around like 22. And the S&P 500 PE ratio, like its true PE ratio right now, is 30.55. So that's like an overvaluation by a lot, a lot. So just something to watch out for. Additionally, September has also historically been the worst performing month. In this graph, you can see the percentage of months in which SPY closed higher than it opened. And this is since 2020, like 2020. So this graph basically shows um like what percentage of like the month what percentage of the years from 2020 for each month that SPY had positive returns on. From this graph, you can see that September is the lowest, like the worst month, and only 20% of the months of September, um, only 20% of the Septembers did SPY have a positive return. So that's only one of the years SPY had a positive return. Additionally, in the graph on the right, this shows historical data since 2010, and you can see September is still tied for one of the worst months. However, this does not mean that September is like definitely going to that like the market is definitely going to have losses during September, or that I think the market is going to go down in September. This is just something to like take a note of. A it's just like a useful pattern, like an interesting pattern. Okay. So next we will go on to our financial news. So before I let our financial news reporters, William, Arav, and Sebastian, present their amazing news reports, I will first do a highlight on one of the stocks that the Hoperation Fund investment portfolio is owning, and that is AVGO or Broadcom. So AVGO had a really good Q3. It reported a record Q3 revenue of $16 billion, driven by a 63% year-on-year increase in AI semiconductor sales. So this shows that it has recently it has had a huge growth, and the company forecasts Q4 revenue to reach $17.4 billion, citing strong demand for AI and VMware products. CEO Hawk Tan highlighted a 110 billion backlog and the introduction of new networking products to support AI clusters. So $110 billion backlog, this shows there really is a strong demand for its products, and the fact that it is like releasing or planning to release new networking products to support the trend in AI clusters shows that it is like growing its business and like expanding its services. Additionally, AVGO is also set to have a collab with OpenAI. They're going to launch their first AI chip and aiming to reduce reliance on NVIDIA. The chip will be used internally, aligning with trends among tech giants like Google and Amazon to develop custom AI chips. So this is like a really interesting new collaboration. Of course, I do not know how that no one knows how the AI chip will turn out or like if it will have a lot of success. But it's um if it succeeds, that would be a really good development. Additionally, from this visualization of Broadcom's Q3 income statement, you can see it's like different business activities. It has pretty high growth, double-digit growth for both of its main sources of profit, semiconductor solutions and infrastructure software, with 26% growth and 17% growth. And these two areas are like the profit Broadcom gets from these two areas is like spread pretty evenly. And its revenue has had a 22% growth rate. Additionally, it also has nice margins, nice gross profit, operating profit, and net profit margins. So overall, a nice, good income statement. And now let's let our news reporters present their reports. So our three news reporters this meeting, Arav, Sebastian, and William, have very kindly agreed to make a short report on recent financial news or investing related news. Okay, so I see Sebastian has agreed to present his news report first. So yeah, let's let Sebastian present.
I didn't realize that it was supposed to today.
Huh?
I didn't realize that it was supposed to report today.
Oh, okay, that's perfectly fine then. Because it's like been a really long time, like a few months since our last meeting. So it's perfectly fine if you forgot about the financial news section or you were like misinformed or anything, and that's okay. So how about Arav? Do you have a question or do you want to present a report?
I'll present.
Okay, that's great.
So I conducted an analysis of the AI sector. The newest AI models primarily rely on language learning models and neural networks. LLMs process vast amounts of information at a faster rate, while neural networks organize data and improve AI's processing speed and decision-making ability. The global AI market is currently estimated at $250 to $300 billion. The major companies offering AI hardware infrastructure are Intel, NVIDIA, Taiwan Semiconductor Manufacturing Company, AMD, Qualcomm, Broadcom, Micron, and Texas Instruments. The EFTs in the AI space are the Dirextune Daily Semiconductor Bear 3X shares, also known as SOX. SOX is an inverse ETF that includes major AI-related companies such as NVIDIA, Intel, AMD, and Texas Instruments. However, due to the impact of tariffs imposed during Donald Trump's administration, I advise against investing in stocks at the time. The sector remains heavily impacted by these tariffs, so waiting to purchase might be a wiser strategy. The other ETF I found was the iShares Semiconductor ETF, which is SOXX. While SOX has performed relatively well and is currently in the green, I still recommend caution. Despite its positive performance, it is also vulnerable to external factors like Donald Trump's tariffs and other market fluctuations that could potentially affect its future gains.
Okay, thank you so much, Rob. That was a really interesting news report, and it's especially useful to know about like the AI industry, especially in like the recent um macro trends and AI. So thank you so much for taking the time to make that. Um, okay, let me see. Okay. I don't think William is here today. s- Um, so that's fine. We'll skip him. So again, thank you so much, Rob, for that news report. Um, we will also need financial news reporters next meeting too. So does anyone want to volunteer to become a financial news reporter?
I'll volunteer.
Okay, so Rob and Isabella. Okay, that's great. Okay, I'll write that down. Hold on. Okay, that's great. Um, Sebastian, do you want to volunteer too?
Yeah.
Nice. Then that's settled then. Thank you guys so much for like volunteering to take the time. And anyways,
Have Hank in the
Hank.
chat. Volunteer, yeah.
Okay, nice. Okay, thank you. So again, I would really encourage you to um become a financial news reporter though, because it is a really good chance to like practice your researching skills and like and and like and like learn more about like the financial market and news, and it's also a great way to practice your presenting skills too. In fact, so for future financial news reporters, um I actually really love the way that the news reports are being presented right now. um like it's great to like hear them. um I think for future financial news reports, it would be even better if we have like a slideshow sometimes. So please, please prepare a slide like summarizing your news article and send it to me before our regular meeting. And you will have a few minutes to present your slide during the session. It doesn't have to be a fancy slide. It can just be like what you've written down already. But it's a great opportunity to like strengthen your presentation skills too. So nice. Looking forward to hearing your financial news reports next meeting. Okay. So finally I will talk about our investment lecture for today. So first, let me start off with a picture of the month to like emphasize some key concepts I'm going to be talking about in this meeting. Okay, so say I have investor A and investor B, and I'm really sorry because these faces look really ugly. But anyways, so investor A starts investing at age 25. He invests $5,000 per year for 10 years, and like puts his investments into the stock market. However, he does not put any extra investments after age 34 and just lets his money like sit there in his investment account. Investor B, meanwhile, starts investing at age 35, and he invests $5,000 per year from age 35 until age 65, so for 31 years. And assume they both have like the same constant yield of 8%, let's say. And investor A invests $50,000 and investor B invests about like $155,000. So does anyone want to like share any insights they've made or like anything you've noticed about these two investors? Yeah, Sebastian.
I'm sorry for the background noise. But investor A starts a lot younger, 10 years younger. And I think that investor A, that's why investor A, I would think, is the one that has the most money.
Okay, nice prediction, Sebastian. Okay, we'll see if that is true or not. Does anyone else have anything they want to add? Okay. So this is the complete picture I found. And it shows the money investor A and investor B ended up with at age 65. So yeah, Sebastian, you were right. Investor A ended up with more money. What I want to focus on though is the fact that while investor B invested much more money than investor A, he invested around $150,000, while investor A invested around $50,000. So, like, more than just like 3 times the amount of money investor A invested. Investor A still ended up having more money. Why is that? Because even though investor A did not invest a lot of money into the stock market, he invested earlier. And like through the power of time and the power of compounding, um, even though he didn't put a lot of money into his investment account, over time, it kept on like compounding and compounding and growing and growing. So it ended up just like growing to a huge amount. Meanwhile, while investor B invested like put much more money into his investment account, he still ended up with less money because his money did not have enough time to grow. So that's the key concept I want you guys to realize from this picture. It doesn't matter so much as like how much money you put into your investment account, although that is important, of course. What's most important is like investing early and like through the power of like time and compounding to let your money like grow and grow. So that is really relevant to us because right now is actually the perfect time to start investing. Imagine if investor A started investing at age 15 instead of age 25, then he would have ended up with way more money than he ended up with like right now. Maybe like double or like triple or like way more. So it is like crucial to like start investing now. You might not have like a lot of money to put into your investment account, but after a long time, after years and years, your money will grow into a really large sum. So talking about investments, what is an investment? So according to a dictionary entry in fidelity.com, an investment is something you spend money, time, or effort on in hopes it creates more value than its original cost. In financial investing, an investor takes their money, also called capital, and spends it in buying investments, often called assets, with the goal to generate a profit over time. And some typical assets include stocks, bonds, gold, houses, Bitcoin. You probably have heard of these assets before. However, just because something is an asset doesn't mean it's a good asset though. Like some assets are better to own than others. So here I put two quotes by two really legendary, famous, really good investors. The left one is Warren Buffett, and the right one is Howard Marks at Oak Tree Capital. And I have put what they've said on the topic of assets, and I'll read them out loud. So Warren Buffett said, "Gold won't have done anything for you. The gold itself doesn't produce anything. Productive assets such as farms, real estate, and yes, business ownership produce wealth, lots of it. Most owners of such properties will be rewarded." Howard Marks also said, "Assets that don't produce operating cash flow or don't have the potential to do so in the future have no earning power, and that makes them impossible to value objectively, analytically, or intrinsically." So what are these legendary investors saying? They're saying that like a good asset, an asset that you should hold, should have cash flow. It should have the ability to earn money for you, to like generate money for you. So things such assets such as gold or Bitcoin may not necessarily be like what they define as a good asset. Like for example, let's take the example of Bitcoin. Bitcoin doesn't really have value. It can't like generate cash for you. It doesn't have like it can't give you a profit or it can give you earnings. When you buy Bitcoin and you try to get a profit from Bitcoin, you are basically just buying it and hoping that sometime in the future another person will come along and they'll buy your Bitcoin from you at a higher price than you bought the Bitcoin in the first place. But if no one wants to buy the Bitcoin from you, then like no one wants to buy it from you, then that Bitcoin basically is worth nothing. Like you're basically just owning nothing. And that Bitcoin doesn't like when you own the Bitcoin itself, it doesn't like it's not like a company where it can like do its business operations. It can produce like cash, and then when you buy a share of it, you can like take a part of that cash. Unlike a stock or like houses or like bonds or anything, Bitcoin doesn't like produce cash for you itself. When you're trying to earn money from it, you're basically just speculating that or like hoping that someone else will in the future want to buy it. So that is why many like great investors don't count Bitcoin as an actual like investment. So now that we know like the definition of investment and different types of assets, we should also like know how to calculate the return of an investment. So the return rate of an investment is calculated by subtracting the starting price of the investment from the final price and then dividing by the starting price. So here, let's take an example. Example 1. Say I spent $50 to buy one share of a company's stock. The stock price increased to $80 after 1 year. So what's my investment return rate? The return rate would be 80 minus 50 and then divided by 50, which is like the original starting price. And then you get like the return rate like in terms of like the starting price of that investment. So that's around That's 0.6 or 60%. In example 2, say I spent $50 to buy one share of a company's stock again, but instead the stock price decreased to $20 after 1 year. So my return rate then would be 20, the final price, minus 50, the starting price, divided by the starting price. So that would be negative 60%. From that equation, you can also find you can also find the equation to calculate the final price of an investment if you know the starting price and the returning rate. So say like I am wanting to like make an investment and I'm trying to like predict for each return rate like what will be the final price, or maybe if I'm trying to like buy a bond and I know the return rate and I want to know like what's like the total amount of money I get in the end. So then you can use this equation, which is derived from the previous one. So say you spend $100 to buy one share of a company's stock, and after 1 year, the stock had a return rate of 25%. So what would be the final price of the stock then? You guys probably learned this in school. So the final price would be 100 times 1 plus 25%, and then that would be equal to 125. Okay. So now, say I want to find the final value of my investment after many years, not just like 1 year. So say again, I have that investment of $1,000. Every year, it generates a return of 10%, and I want to know the final value after 10 years. So the value after 1 year would be 1,000 times parentheses 1 plus 10%. The value after 2 years would be the value after 1 year times 1 plus 10%. So that would be 1,000 times parentheses 1 plus 10% to the power of 2. The value after 3 years would be the value after 2 years times another 1 plus 10%. So then that would be 1,000, the starting value, times 1 plus 10% to the power of 3. So after 10 years, I would get 1,000 times parentheses 1 plus 10% to the power of 10. And that would be around 2,593.7. So from this, you can find the equation for the final price of an investment after n years. That would be the starting price times parentheses 1 plus the annual return rate to the power of n, or the number of years. And this annual return rate is also called the compound annualized return, or compound annualized growth rate. And the CAR or CAGR, it doesn't really matter, they're both the same. Is a measurement of annual growth over a given period that accounts for compounding returns. It does not show the actual return ratio, but it provides an average based on the starting and final values over a specific period, assuming that the returns have been reinvested. So this is the equation for the CAGR. It's the ending value over the beginning value parentheses to the power of 1 over the number of years minus 1. Okay, so say I have an investment. In year 1, its return is 20%. In year 2, its return is negative 15%. And in year 3, its return is 10%. So what's the CAGR over the 3 years? So first, to calculate the CAGR, I want to calculate the price after year 3. So I can calculate the value after year 1, and then using that, the value after year 2, and then the value after year 3. And then I get the value after year 3. So then I plug that in into the ending value divided by the beginning value and to the power of the number years, which is 3. So to the power of 1 over 3 and minus 1. And then I get 0.0391 or 3.91%. So that's how you calculate the compound annualized growth rate. And this is pretty useful if you are trying to find like if you want to know like the average return for your investment. Okay, so now after we covered some preliminary knowledge, let's talk about the first concept in today's investment lecture, the compounding effect. So you guys know the Mona Lisa, right? Everyone can know it. In 1540, King Francis I of France paid what was equivalent to $20,000 back then, although dollars didn't exist back then, for the Mona Lisa from Leonardo da Vinci. Now the Mona Lisa is worth almost $1 billion. So that's this number over here. I wrote it out for you guys so you can see how huge that is. So is this an amazing deal? Do you guys think this is a amazing deal? Yeah, I see some nodding. Thumbs up. Okay, so you guys agree. Of course, this is a great deal. Who wouldn't want to like pay $20,000 and you get like an amazing, most famous painting that's worth $1 billion? Of course, it's a great deal. So then again, so what if Francis had invested that $20,000 in the stock market, assuming it existed in 1540, and delivered a 6% compound annual return since 1540? So how much do you guys think his investment would be worth then? Any guesses? You can type it in the chat. Okay, Oliver said multiple quadrillion. Yeah. Anyone have any other guesses? Equals the world economy. Wait, that's crazy. Trillion? Okay, 100 trillion. Okay, like a really crazy amount. Okay. So his investment would have been worth 37.5 quadrillion today. And again, I wrote it out for you guys so you guys can see how big that is. This amount of money. Yeah. Wow. So was his was King Francis's investment in the Mona Lisa a good investment? Of course it was. But if he had invested, assuming there was a stock market, if he had invested that money into the stock market, then that would have been an even more amazing investment. So that shows the power of compounding over those years. And note that 6% is really not a high return. Like the stock market on average, I think has about like a 10% annual return. So if he had a higher return, then he would have had then that would equal an even larger amount of money. Right. So by this example, I just need to say that um you don't need to you don't need to go around looking for the next Mona Lisa or like the next like port painting or like antique to buy that you think might um like earn you money, because really the Mona Lisa is like a once in like a million investment. Like all of those other paintings, they didn't end up being that famous and they didn't end up being worth that much money. So instead of trying to go around and find the next Mona Lisa, you can just put your money into an investment account and like watch it grow. This really shows like the power of like the time effect and the compounding effect. Okay. So what are some things you can invest in then? Well, here I show the historical returns of 5 of the major asset classes. S&P 500, gold, cash, real estate, and bonds. Since 1928, stocks have returned 9.9% annually, gold 5% annually, bonds 4.6% annually, real estate 4.3%, and cash 3.3%. Like this is cash equivalents. Cash, like actual cash will like decrease in value over time. Here, this is like short-term bonds. And note that this is even after like all of those like this is after like a World War II and like all of those like market crashes or like bad economies, and this it still has a substantial these assets still give you a substantial return. Oh, also another asset you can hold is the Berkshire Hathaway stock. Okay, some people say that the Berkshire Hathaway stock is basically almost identical to the S&P 500. And here I plotted their returns since 1986. Wow, Berkshire Hathaway really has been here a long time. But anyways, you can see actually the two portfolios are basically the same. Like if you had invested 100% in the Berkshire Hathaway stock and 100% in the S&P 500 stock. It just still like dips, the growth is about the same. It's almost like it's very, very similar to the S&P 500 index. But the Berkshire Hathaway stock has um a higher compound annual growth rate by like more than 4%. And it's so if you had invested in it since 1986, its final value is much higher than the SP 500. So it can sometimes be like a better alternative to the S&P 500, some people say. Of course, I do feel like the S&P 500 is slightly less risky because like it's just a compilement of the 500 biggest stocks, while the Berkshire Hathaway stock sometimes will depend on like whoever's running the company. For example, I think Warren Buffett is about to retire, so um it's a little uncertain how his successor will run Berkshire Hathaway. So now, just like going back to the topic of compounding, this is a visualization of the net worth of Warren Buffett. And okay, so does anyone just want to like blurt out or type in the chat what they can see from this photo? Like from this visualization? Okay, someone calling some money. Okay, how about okay, how so okay, compounding exponentially greater in his later years. Yeah. You guys are all absolutely right. You can see in his later years, his money is really, really growing exponentially. Like you guys, this graph is almost like perfect to like those exponential graphs you've seen like math class. And you can see from each year after the next, his money is almost like is increasing like at a really, really fast rate, like about like 50%. Like you can see here, his money is almost like doubling sometimes. But it's kind of crazy to believe that this return he experienced is actually around the same throughout his life. However, because of the power of compounding, um, most of his wealth was gained in his later years. So he said that he mentioned once that 99% of his wealth was accumulated after the age of 53. So if he didn't, if he hadn't like lived so long, like invested so long, that money would have been much, much less than what he has now. So this really just emphasizes how important time is. If you have if you have like a large amount of money, you will have even larger returns. So like your return is really dependent on how much money you have. Sebastian, do you have a question or something to add?
Wouldn't he also have to get like pretty lucky and get the right stocks that he owns?
Yeah. Of course, it's very hard for like normal people to achieve this because Warren Buffett is a legendary investor, right? Like these are like really nice returns. But even for ordinary people, like even if you just put your money into like an index or a safe ETF or anything, your money will still experience like a lot of exponential growth. It may not be as fast or as like extreme as Warren Buffett's, but it will still grow a lot. And like it will like experience something that's called the snowballing effect, which is like as the money you have grows like bigger, you will continue and continue your money will grow even faster. It will like continue and continue to have like more returns. Also, note that he also started investing when he was like a teenager, like us, like when he was 14. Isn't that cool though? So maybe you can start investing right now, and who knows, maybe one day you will become the next Warren Buffett. It's good to be optimistic. Okay, I see we're running low on time, so I'm gonna skip the story of two savers because like the previous like picture I showed you guys is about the same. And here is a graph of two portfolios with annualized compound rates of 15% and 17%. And this is after 30 years. And basically, this picture shows you that a small 2% difference in a compound in rates can lead to nearly double the final balance after 30 years. You might think, oh, the difference between these portfolios is so little. But after a lot of time, because of the power of time and compounding, the gap in these returns is actually huge. So this is why you should strive to have the highest returns as possible. Like you might just think 1 or 2% doesn't make a lot of like doesn't matter a lot, but in reality it really does over a long time. Okay. Okay. Since this game is really fast, it's like 30 seconds, I'll just do it then. So there I have 5 stocks. Stock A, stock B, stock C, and stock A, stock B, stock C, D, and E. And stock A has a 10% return in the first year and 10% return in the second year. Stock B has a 50% return in the first year and negative 20% return in the second year. Stock C has a negative 20% return in the first year and 50% return in the second year. Stock D has a 100% return and then negative 40%. And stock E has negative 40% and positive 100%. So quickly, no calculating this, just based on your instincts, just type in the chat, or you can like just unmute yourself and blurt it out. Which stock do you think gives the highest return? Yeah, Sebastian?
I think stock E.
Stock E, wait, like E? Okay, interesting. Okay, so Mrs. Wan said A, and don't try to calculate this. Just like say whatever is your instinct. Okay, Om said B. Oliver said A. Okay, you aren't supposed to compute this. A. Okay, someone said D. Okay, okay. A. Okay, this is really interesting. Okay, so actually, the stock that has the highest return is A, and it's actually really interesting how. Okay, true about the process of elimination, but this is like an important concept. Okay, so like lock in. So it's really interesting how you guys had like pretty different answers, and yeah, this can be very, very confusing. Um, like many of you guys said B, D, E. So, and this can be really, really confusing to people because some people might say, oh, plus 50% and minus 20%. 50 minus 20 equals 30. Then I will have a 30% return. But it doesn't work like that because um of like compounding, and also um if you think about it, say you have an investment that's like $100, okay? Then you lose 50%, then you only have $50. Then you need a 100% return to like earn back and like go back to your original amount. So so um this shows how you should like aim not only to have the highest returns possible, but also have to have the lowest return, like the lowest losses possible. Because even if you might have really, really high returns, um if you still have huge losses, you're still not gonna earn money. Like you might think, oh, what I have a 100% return. That's amazing. And I only lost 40%. That's still great. But in reality, it's not as good as if you had a stable 10% return. Okay, and for your information, don't feel bad because like if you got the answer wrong, because this problem is pretty famous. It always like it tricks a lot of people. Like even full-grown adults will be tricked by this. And for your information, stock A ended up having a 21% return, and then stocks B, C, D, and E ended up having a 20% return. So that's a really interesting game. I see again we're running low on time, so I will stop here. And I'll say the rule of 72 for next time. So next time, I will introduce the rule of 72, the time value of money, which we kind of already covered today, the introduction to stocks, more about stocks, an introduction to market indexes, and then finally, if we have time, I will start our first fundamental analysis 101 lecture. So something really exciting I'm starting this time is that we can now is that I'm introducing the concept of invited presenters. So if any of you guys want to like participate um, in our meetings and you want to strengthen your presentation skills, you want to like strengthen your knowledge in finance, you can become an invited presenter. You can present either the concept of the rule of 72 or the time value of money. And also, if you're not clear on both concepts, you can look back on our previous meetings. And I have talked about these two concepts before. And how do you do this? You go to investing in the website, go to investing resources, and then I compiled um clips of like all of these important concepts. So okay, maybe I don't have Rule 72 here. Or anyways, you can also like go to our lectures for 2024 to 2025 and what I'm talking about here, and you can look here. Yeah. So by becoming an invited presenter, you will prepare a few slides on your topic and send them to me 1 week before our regular meeting. And you will have about 3 to 5 minutes to present your slides during the session. Again, this is a really amazing opportunity to strengthen your presentation skills, and it's really interesting. Okay, so does anyone want to become an invited presenter?
Maybe they can. Anyone is interesting can email you.
Okay, okay, that sounds great. Oh, Sebastian, do you want to become one?
So that's different than the other one, right?
Yeah, this one is about like financial concepts. The other one, like the news reporting one, is about like you just um you go online and like research the like latest finance related news or like an in-depth analysis of like some industry or company or anything.
Oh, okay.
This one is about like concepts we like are going to cover.
Yeah, I don't know if I can do that for the next one.
Oh, yeah, that's perfectly fine. If anyone wants to become an invited presenter, you can email me after this. After this, um, or since I don't think we have covered these two concepts recently, I will probably like talk about them next lecture too. If no one if it wants to become an invited presenter. And finally, I'm really sorry. I went like pretty overtime. Just a quick announcement. I'm establishing multiple like most contribution reward awards to recognize members who make outstanding contributions to the Hoperation Fund. So some like ideas of like some examples of contributions are like providing valuable suggestions to improve the Hoperation Fund and then like putting those suggestions in place, making significant contributions to fundraising, and as well as like investment, charity, or educational activities and events, and other efforts that would meaningfully enhance the fund's impact on the world. These are just like a few examples. By the end of July 2026, I and all of our adult advisors will vote to select the award recipients, and each award will include a trophy and a valuable investment book. And yeah, that's something to keep in mind and to look forward to. Okay, now this is the end of our first meeting. I hope you guys had a great time. I hope you guys learned a lot of things, and see you next meeting.
Thank
Bye.
you.
Thank you.
Thanks.
Bye.
Bye. Thank you. See you next meeting.